Hey, what's going on, everybody? Welcome back to Zacchy Crypto Update. If you've been following the market, especially the meme coin space, you know there's one frog that's been jumping higher than all the rest, PEPE Coin. In just 4 days, PEPE has rocketed an astonishing 55%, hitting a 4-month high. It's gone from $0.4075 all the way to $0.4039. An incredible run, right? But here's the critical question swirling in the crypto community right now. Is this a genuine breakout? Or are the big players, the whales, luring unsuspecting investors into a trap, setting the stage for a massive dump? Today, we're breaking down PEPE's recent surge, looking at the key indicators, and giving you my expert opinion on what could be coming next. This is a high-stakes game, and you need to be prepared. Let's dive into what's been happening. PEPE's recent price action has been nothing short of spectacular. From its local low, it climbed relentlessly for 4 consecutive days, showcasing what looks like incredibly strong demand. At press time, it's trading around $0.4032, still up over 55% this week, despite a slight cool-off in the last 24 hours. This surge isn't just driven by retail buyers. The data clearly points to massive accumulation by PEPE's largest holders, the whales. We've seen an incredible 21.18 trillion PEPE tokens bought up by whales in just the last 24 hours alone. Think about that volume. This kind of concentrated buying pressure from large holders is usually a strong bullish signal. But here's where the plot thickens and where my analytical antenna starts twitching. We've seen this movie before. Such a colossal buying spree by PEPE whales was previously observed in November 2024 and again in January 2025. And if history has taught us anything in crypto, it's that sometimes these patterns can repeat themselves, for better or for worse. Now, let's talk about a crucial technical indicator that's flashing a potential warning sign, the Relative Strength Index, or RSI. For those new to this, the RSI is a momentum oscillator that measures the speed and change of price movements. It ranges from 0 to 100. Generally, an RSI above 70 indicates an asset is overbought, meaning its price has risen too quickly and might be due for a correction, while below 30 suggests it's oversold. Currently, PEPE's RSI has soared to an alarming 83. This puts it deep into overbought territory, suggesting that buyers might be getting exhausted and a significant price correction could be looming. And this is where the déjà vu really hits. The last time PEPE's RSI climbed above 80, we saw a very similar pattern play out, culminating in a massive price decline. For example, in late November 2024, when the RSI hit 88, PEPE surged to $0.402525. Then, when it reached 80 in December, prices rallied to an all-time high. But what followed was a brutal correction, with the meme coin plummeting as low as $0.4052. That's a significant drop. So, if history rhymes, and in crypto it often does, this current wave of aggressive whale buying and an extremely high RSI could very well be a prelude to another sharp correction. This is why you hear me emphasizing caution. The pump is enticing, but the risk is real. But here's where the analysis gets really interesting and, frankly, a bit contradictory. While the RSI screams overbought, other on-chain data points are telling a slightly different story, suggesting the market isn't folding just yet. Take a look at PEPE's exchange flow balance. This metric tracks the net amount of tokens moving into or out of exchanges. Currently, PEPE's exchange flow balance sits at a negative minus 35.8 billion. What does this mean? It indicates that more PEPE tokens are being withdrawn from exchanges than deposited. This is often a bullish sign, as it suggests that traders are moving their tokens into cold storage or private wallets for holding, rather than keeping them on exchanges to sell. It points to a continued accumulation, showing that a significant portion of investors are still bullish on PEPE's future potential, despite the high prices. Furthermore, if we examine the Directional Movement Index, DMI, which helps us understand the direction and strength of a trend, PEPE is showing strong upward momentum. The positive directional indicator, plus DI, is at 46, while the negative directional indicator, DI, is at 25. This confirms that the current upward trend still has considerable strength. My thinking here is this. We have two powerful, yet conflicting signals. The RSI suggests imminent correction, drawing parallels to past crashes. Yet, The exchange flow and DMI indicate that current holders are diamond-handing, and the underlying momentum is still strong. This is a classic battle between technical overextension and fundamental holding conviction. It makes for a fascinating, albeit risky, scenario. So, what's next for Pepper? Based on this intricate dance of signals, we can outline a few scenarios. If the strong upward momentum confirmed by the DMI continues, and bulls manage to shrug off the overbought RSI, Pepper could potentially cover the small losses from the past day and attempt to move towards $0.4014. Should it breach this level, the next significant resistance point to watch is around $0.000016. These targets are within reach if the current buying pressure sustains. However, if the surge in RSI and the historical precedent of whale-led pumps followed by dumps plays out, then we could see Pepper retrace significantly. A likely retest level in that scenario would be around $0.4017. This would represent a healthy pullback, but for those who bought at the top, it could feel like a trap. My personal opinion and advice here is crucial for you. Meme coins, by their very nature, are incredibly volatile and driven by speculation and sentiment rather than fundamental utility. While the potential for quick gains is intoxicating, the risk of rapid, devastating corrections is equally high. This situation screams for caution. If you're in profit, consider taking some off the table. No one ever went broke taking profits. If you're looking to enter, understand that you're doing so at a point of extreme price action. Always have a strategy for managing your risk. Whether that's using stop losses or only investing capital you are absolutely prepared to lose. The market has seen this movie before, and while the ending isn't guaranteed to be the same, ignoring the historical data would be foolish. Before we wrap up, please remember this vital message. Important crypto disclaimer. The information shared in this video is purely for educational and entertainment purposes and should not be construed as financial advice. Investing in cryptocurrencies carries substantial risks, including the potential for complete loss of your investment. Always conduct your own thorough due diligence and consult with a certified financial advisor before making any investment decisions. Past performance is not an indicator of future results. That wraps up our deep dive into Pepper's roller coaster ride. It's a fascinating case study of market dynamics, whale influence, and conflicting technical signals. I truly hope this analysis helps you make more informed decisions in this incredibly exciting, yet unpredictable, crypto market. If you found this breakdown valuable, please smash that like button, subscribe to Zacchy Crypto Update if you haven't already, and hit the notification bell so you're always first to know when I drop a new video. Your support is what drives this channel. Stay safe out there, make smart moves, and I'll catch you in the next update. Peace out.